Hey everyone, welcome to High School Dropout's Advice. Today we are talking about the stock that trades under SENS and the company's name is Senseonic. We will talk about what this company is offering, the fundamentals, the outlook for this company, and if this business is a potential multi-bagger or not. Before we start, please subscribe to my channels. Videos like this take a long time of research, scripting, shooting and editing. It will help me and the YouTube algorithm a lot. I have been here for over 3 months and we are doing daily uploads for you guys. So let me introduce you to Senseonics Holding, which was founded in Maryland in 1996. The stocks was trading low as 38 cents during the pandemic, but you can see that we had a spike up at the beginning of 2020, but got interrupted by the pandemic. The stock went close to $5 per stock, but corrected to $3.16 at the time of recording without any negative news. So is this an opportunity to buy? Give me a little bit more time so I can tell you what the company is doing. Let me show you their website so you get to know in what product you are investing. So SENS is a device which helps people with diabetes to track their glucose level. They are using an implementable long-term CGM system. CGM stands for Continuous Glucose Monitoring. Let me show you how the system works and you decide if this is the future or not. We see the sensor. The sensor will be placed in your body and you will wear a transmitter on your upper arm, which is waterproof and very durable. The transmitter will send data to your mobile phone every 5 minutes, so you are constantly updated about your glucose level. If your glucose level gets low and you are not close to your phone, the transmitter will warn you as well. The sensor is small like a penny, as you can see here. The US version is good for 90 days, but they also have a 180 days version which is already approved and used in Europe. The US is still waiting for the FDA to approve it in the 3rd quarter of this year. The transmitter will be stick to your upper arm like the picture you see here. They also have a different look, as you can see. This will be a quicker and more comfortable way to check the glucose level. The old school way is called blood glucose monitoring, in short BGM, where you need to test a little of your blood to find out your glucose level. There's no question that implementation will be the better option in the future. You might ask me if other competitors have something similar to Senseonic SENS technology. There are 7 to 14 days sensors from competitors, but the other competitors are stuck with the transmitter and have to be replaced with the transmitter and sensor at the same time. This SENS technology can last up to 180 days and in 2 years up to 365 days. And you can remove the transmitter if you want to. So Senseonic is ahead of their competition. You can read this also at this source. SENS XL is the only CGM providing continuous glucose reading for up to 180 days with a single sensor in person age 18 and older in the European market, and so on. Let me show you the fundamentals really quick so you know what is going on. You can see that the revenue dropped from a total of 21.3 million to 4.9 million. Based on the fundamentals, this company is not a buy. But let me explain more and make your own decision. A big reason for the low performance is the pandemic that slowed down their business in implementing those devices for their patients. Another big reason is that an investor got cold feet and requested the full repayment of 48.5 million, which you can see here. On August 10th, 2020, Senseonic announces the strategic collaboration with Ansensia Diabetes Care, a leading company with about $1 billion in sales. This is something all the investors should understand. A $1 billion revenue company is working together with a $4 million revenue company. This is a bullish sign. Ansensia is doing business as Contour, and you might saw this brand online at Amazon. They are selling low price blood glucose measuring devices and make money selling the small lancets that are replaceable. They understand that their old school BGM system is becoming obsolete, so they invest in the future. Ansensia will invest around 250 million in the next 5 years into Senseonic, which should be enough money for them to stay afloat. The revenue should also increase soon since the SENS system is available in the European market. You can see this German website and the German places where you can get the SENS system implemented. It's an extensive list. The addressable market will increase with the launch of SENS 180 and SENS 365, and finally with the Freedom system. SENS 180 is for patients with diabetes 1 and SENS 365 is for diabetes 1 and 2. Have a look at the percentage of diagnosed diabetes patients in the USA. We can say that the numbers are scary. It's around 5 to 7 times higher than 20 years ago. Let me show you this. 34.2 million Americans, or 10.5% of the population, had diabetes. Every year there are 1.5 million Americans diagnosed with diabetes. Every year. Pre-diabetes in 2015, 88 million Americans aged 18 and older had pre-diabetes. So looking at these numbers, you know that the market is going bigger by the year. It's a sad number, but this is the reality. So what do I think now? The market cap is at moment at 1.2 billion. And since the business is not making any money but got their products approved in Europe and most likely will get approved by the FDA in September, the company can be undervalued. At the moment, it's useless trying to evaluate the company by its earning or revenue. The only way we can have an idea is by comparing it to a competitor. The only pure CGM diabetes company is Dexcom, which generates a revenue of around 1.9 billion a year and has a market cap of 35 billion. Let me show you the website and their product. You can see that their product only lasts up to 10 days. This is nowhere close to what Senseonic is offering. So you can see that Senseonic might be able to increase their revenue quickly by having the best product on the market. If they can get to 500 million in revenue in 2023, this would be a quarter of Dexcom's revenue. A quarter of Dexcom evaluation would be an 8.75 billion market cap. This is 7 to 8 times more than today. So I see a huge potential for the stock to spike. Senseonic has the best product, and with Ansensia they have a very strong partner for distribution and growth. This for me is a multi-bagger opportunity. Anyway, for legal reason I have to say I'm not a financial advisor, so remember, your money is your responsibility. I'm just a guy on YouTube. Please do your own due diligence and try to make the wisest move. Don't forget to share, like and subscribe. Many thanks and see you hopefully in the next video. Thank you, bye!